Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of SMC Global Securities Limited, hosted by X-Before Advisories. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gautam Kothari from X-Before Advisories. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Thank you for joining us on the Q1 FY26 earnings conference call of SMC Global Securities Limited. Joining us today on this call are Mr. Subhash Chandra Agarwal, Chairman and Managing Director, SMC Group, Mr. Mahesh C. Gupta, Vice Chairman and Managing Director, SMC Group, Dr. D.K. Agarwal, Chairman and Managing Director, SMC Capitals Limited, Mr. Ajay Garg, Director and CEO, SMC Global Securities, Mr. Anurag Bansal, Whole-Time Director, SMC Global Securities, Mr. Himanshu Gupta, Director and CEO of Moneywise Financial Services, Ms. Shruti Agarwal, Whole-Time Director, SMC Global Securities, Mr. Pranay Agarwal, Director and CEO of StockScart, Moneywise Finvest Limited, and Mr. Vinod Kumar Jhamar, President and Group CFO. Before we begin, please note that today's discussions may include forward-looking statements which reflect the company's current views and expectations. These statements are subject to risk and uncertainties, and the actual results may differ materially. A detailed safe harbor statement is provided on the second last page of our earnings presentation, which is available on the stock exchanges and the company's website as well. With this, I now invite Mr. Subhash Agarwal to share his opening remarks. Over to you, sir.
Yeah, good evening, everyone, and a warm welcome to all participants on this call. I trust you have had the opportunity to review our Q1 financial year 26 financial results and earning presentations, which are available on both the stock exchanges and our website. Before discussing our financial performance, allow me to provide some context on the broader industry landscape and recent developments that have shaped the business environment. The broking and financial services industry is undergoing a pivotal transition shaped by regulatory changes, including stricter F&O norms and revised expiry cycles, alongside global uncertainties. These factors have led to a temporary dip in derivatives trading volumes and client activity, despite robust retail participation marked by 8.4 million new NSE Demat account in financial year 25. While intermediaries face near-term revenue pressures, long-term growth drivers such as digital-first investing, product innovation, and expanding Tier 2, Tier 3 market penetration remaining strong, with SEBI measures aimed at fostering greater stability and transparency in the capital market. India NBFC sector has displayed resilience amid evolving macroeconomic dynamics, though credit growth is expected to moderate to 13 to 15% in financial year 25-26, down from 17% over the last two fiscals. As per ICRA rating, and MSME lending remain the primary growth drivers, with demand supported by improving borrower credit profiles and steady disbursements. However, NBFCs are adopting to tighten RBI regulations such as restrictions on default loss guarantees for fintech-originated loans, and are recalibrating pricing and provisioning, particularly for MSME borrowers. Despite these adjustments, asset quality has remained stable, and the sector is poised for sustainable recovery, aided by favorable borrowing conditions and rising demand from underserved segments. The life insurance industry has sustained double-digit growth, projecting India's life insurance market to grow at 10.5%, double the global average of 5%, driven by rising financial awareness and product diversification. Premium collections for April-May financial year 26 have already crossed 52,000 crore, up 11% YOY. The general insurance sector saw a temporary moderation but continues to gain traction on the back of increased corporate retail coverage needs, with digital channels increasingly driving distribution. Insurance broking remains a key beneficiary, leveraging the structural demand for protection-oriented products. As macroeconomic conditions stabilize, both life and non-life segments are poised for a strong rebound, supported by digital penetration and evolving customer preferences. We view this phase as a strategic inflection point rather than a setback. Regulatory measures may cause initial friction, but they are crucial for creating a more transparent, disciplined, and resilient market ecosystem. For well-positioned intermediaries like us, this environment opens opportunities to consolidate market share, enhance customer trust, and scale digital offerings. While current financial indicators such as order counts, margins, and return ratios may not fully reflect this transformation, these represent temporary adjustments. With the stabilization of trading patterns, we expect more robust, sustainable growth supported by sound regulatory foundations and a maturing investor base, including the continued expansion of new retail participant and SIP investors. Now, let me walk you through some key performance highlights for SMC Global Securities Limited. Despite facing regulatory headwinds, we are pleased to report that SMC Global Securities delivered quarter-on-quarter revenue and EBIT growth across broking, distribution, and trading and financing business segment. In quarter 1, financial year 26, our consolidated revenue stood at rupees 425.1 crore, marking a growth of 0.9% on quarter-on-quarter basis. Our EBITDA came in at 100.3 crores, reflecting a strong 59% growth quarter-on-quarter, while our PAT stood at rupees 30 crore, delivering a growth of 632% compared to the previous quarter. In quarter 1, financial 26, our extensive network comprised 2,137 APs across 412 cities, truly reflecting our pan-India presence. We had 6,811 financial distributors, and our mutual fund AUM stood at 4,519 crore. In our NBFC operations, we are through 42 branches across 9 states. Our insurance vertical continued its growth momentum in quarter 1 financial 26, operating through 8 branches nationwide, backed by a robust network of 16,102 POS agents and 356 MISPs. While quarter 1 witnessed some pressure due to external factors, we remain confident of a revival across all verticals, broking, financing, and insurance, as market conditions normalize and investor sentiment improves. Our diversified business model, growing nationwide network, and continued investment in technology position us strongly to drive sustainable and long-term growth. With that, I now hand over to Mr. Vinod Kumar Jhamar, our President and Group CFO, for a detailed overview of our financial performance. Over to you, Mr. Jhamar.
Thank you, Subhash sir, and good evening to everyone on the call. Let me now take you through our financial performance for quarter 1 FY26 on a consolidated basis. For quarter 1 FY26, operating income stood at rupees 425.1 crores. Operating EBITDA was approximately 100.3 crores. EBITDA margin came in at 23.6%. PAT stood at rupees 30 crores with a PAT margin of 7.1%. Segment-wise performance. In the broking, distribution and trading segment, Q1 26 revenue was rupees 274.9 crores. Branch network expanded to 210. In broking, over 26,000 new clients were added during this quarter. Wealth advisory AUM reached rupees 1,007 crores, a 6.2% increase compared to last year. Mutual fund AUM rose to rupees 4,519 crores, an 8.2% increase compared to last year. We added 1,095 new SIPs in this quarter. In the financing segment, quarter one revenue was rupees 51 crores, showing a growth of 25% quarter on quarter. NBFC AUM stood at rupees 1,191 crores. DNPA and NNPA were 3.9% and 2.6% respectively for the quarter. In the insurance broking division, Q1 FY26 revenue stood at rupees 116 crores. Total insurance policies sold were 232,000 in Q1 FY26. With this, we conclude our remarks and open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer section. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Deepak Jaggi from Beyond Investments. Please go ahead.
Hello, sir. Thank you for conducting this call. So my first question was our EBITDA margin has expanded sharply Q on Q. So basically, hello. Yeah, I was telling, EBITDA rose significantly Q on Q. Just needed an elaboration on that. And my second question is, what will be our future outlook for revenue and profitability going forward in FY26?
Over to Jamarji.
Hi, Deepak. This is Vinod Jamar. Actually, our EBITDA margin grew up Q on Q because in the quarter ended March 31, we had an investment loss of 9.33 crores, whereas in this quarter, we had an investment gain of 5.81 crores. So that was a major driver. Apart from this, our arbitrage income also improved. These were two major factors among others. Second question.
Okay. And sir, what will be revenue and profitability outlook for the remaining quarters?
We are hopeful that we will keep the growth momentum continued. We'll have a top line growth of around 10-12% and bottom line growth of around 15%, 15 to 20%.
Okay. And sir, also one more question was that can you give some of your take on your NBFC sector? Why is it facing challenges to grow?
Mr. Himanshu Gupta will be taking this.
Yes. Hi, Deepak. So, Deepak, I think you are referring to the change in AUM over the quarter. So, therein you can see that the AUM has not grown during the quarter. So, there are couple of reasons to it. First of all, given the stress in the SME portfolio overall in the industry, so we have tightened a lot of underwriting policies. So as a result, the fresh disbursement numbers have gone down. So this is the first reason. And going forward, our team, the sourcing channel and the sales team, they have been trained to get the business as per the new policy. So initially it is taking some time, but we will cover up the business momentum as per the new underwriting policy. That is the first reason. Secondly, I talked about it on the last call as well, that we have discontinued, large ticket loans and, focusing on the retail loans, particularly in the LAP segment. So, therein, if you compare it over the last periods, particularly, there used to be a disbursement of about, 50 crores on an average in that product, which is not there in quarter one. And correspondingly, we are also running that book down, and had some foreclosures during the quarter one for large ticket loan to the tune of about 40 crores. So cumulatively, this rundown impact is coming from reduction in the large exposure and tightening of the underwriting policy.
Okay, got it. I'll join back with you if I have any questions.
Thank you, Deepak.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. You may press star and 1 to ask question. The next question is from the line of Rimal D'Souza, an individual investor. Please go ahead.
Hello. Good evening. Thank you. Good evening for this opportunity. My question is, in the recent years, broking, advisory and PMS businesses in India have grown significantly due to increased retail participation. How does SMC Global plan to differentiate itself from the competition and position itself to stand out in this crowded market?
You are taking? Okay. Let me take. Okay. Madam D'Souza, you see, competition is always there. We always face competition, and we are investing in technology to face any competition, because nowadays broking is like a technology company. So we are investing in technology, and we are improving, and every time we are making our products more innovative and research based, and efficiency wise we are improving our app. So all those things we are doing to ease the competition.
Okay. Thank you, sir.
It's all. Thank you.
Thank you.
Thank you. The next question is from the line of Pulkit Gupta from SBS Brokers. Please go ahead.
Yes. Good afternoon, sir. Thank you for the opportunity. My question was also mostly on the NBFC side. We had seen that the revenue had actually seen a 15% decline, which I think Mr. Manchu had talked about, where large ticket loans were actually they had come down. But the other thing that I had noticed was that the EBIT had also dropped about 30%, and the asset quality had actually declined. So what is the explanation for the asset quality? I mean, we've seen that the NNPA has actually grown from 0.9% to 2.6%, and we've also seen a very sharp drop in the PCR.
So, I got your question, Pulkit. So, the first point that you highlighted is the decline in the total revenue. So, I believe you are comparing year-on-year numbers for quarter ended June 30th. So, if you will see, there was a item in the corresponding quarter last year of net gain on fair value changes of about 17.5 crores, which was 4.7 crore in this quarter. So that is the abnormal gain that we had last quarter under this head. Otherwise, the interest income has gone up if you compare year-on-year figures. So that was number one. Number two, regarding the asset quality. So the GNPA numbers have gone up. That is primarily because of stress building up under the SME sector in the market. However, in our portfolio, the GNPAs are mainly constituted by the secured portfolio, which are covered by the backed by the immovable property, and we have proper the properties are legally verified, and we are under recovery measures wherever, we want to repossess the property or, engage with the customer and some of the customers are paying the amount. So it is a matter of time, and those high GNPAs that you are seeing in the current quarter as well as the last quarter. So we are very optimistic and hopeful that we will recover those GNPAs, and probably in the coming quarter you will see much better portfolio quality number in terms of GNPA. And that is again the same reason why the PCR is low, because these GNPAs are backed by immovable property and we have adequate coverage. Still, we have made little higher provisioning. This is the property value that we have.
Okay, so if I understood you correctly, you are saying that the GNPA increase has essentially been because of the increase in asset quality stress in the secured segment. So you're not looking at any stress in the unsecured part, which is close to about 37% of your book.
That's correct. But however, the delinquencies have slightly gone up in unsecured book as well, given the market scenario. However, since last 1.5 years, we have started taking guarantees, under various guarantee schemes available from central government. So, we are we see less delinquencies due to the tightening of underwriting policies as well as the guarantee coverage that is available on the unsecured book. So that is there is nothing to worry in the unsecured book, and the unsecured book anyways we are reducing over period. If you see over the last couple of years, we have reduced unsecured exposure from 50% to 36%, and going forward also we will continue to do that and want to bring it down to 25 to 30%.
All right. So would it be possible to then have a sense of what is the breakup in the slippage between secured and unsecured? The fresh slippage that you would have seen?
So that I have to, it's not readily available right now with me. We can share these numbers, but to give you a rough figures, 80% of the incremental slippages, they are from the secured book.
Okay. My second question is essentially on the insurance bit. So what would sort of be the reason for the decline that we have seen in the insurance business also? I mean, the insurance broking business, where we have seen a 9% decline in the top line. YOY again.
Parveenji, you take up? Or Sakshi, you take this question.
Hi, sir. Hi, Pulkit. Thank you for the question. So the main reason for the decline in the insurance brokerage is because of so basically by 8% our general insurance business has declined because of because the motor industry is seeing a downfall. But we hope in the next quarter it will increase.
Okay. And so this entire drop in the overall revenue is attributable to the drop in the motor vehicle segment?
Yes,
or,
yes. So basically, So basically, 90% of our revenue is basically from the MISP vertical, which is the motor insurance vertical. So the main reason is because of that only.
Okay.
Yes, Mr. Pulkit, does that answer your question?
Yeah, no. So I was just saying that I would assume that would also be the reason for the fall in the EBIT also that we have seen in that segment.
Yes, exactly.
The slowdown in motor vehicle sales.
Yes. But we hope to improve it in the coming quarters, yeah.
Okay. And how has been the life insurance bit over there? I mean, has that also...
So life,
Since that is increased slightly by 1% from 8% to 9%. So is it more because the vehicle sales decline?
Yeah. So life insurance has also seen a dip in the revenue as compared to the YOY numbers because of the major group insurance client that we had in the last quarter. But we are again looking forward to the client retention in the coming quarters. So that will also improve in the coming quarters, the life insurance segment.
Okay. Yeah. I'll join back in the queue for further questions. Thank you.
Yeah, sure. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Ritesh Jain, an individual investor. Please go ahead. Yes, Mr. Jain, go with the question, please.
Yes. Hello, I'm audible?
Yes,
you are audible, Mr. Jain.
Yeah, sir. My question is that, already there is a big players like Zerodha and Grow. So how SMC Global dominate the difference in technology and how it inspired the retail young investors So this was my query.
Okay. Hi, I didn't get your name.
My name is Jitesh Jain.
Okay, hi Jitesh. This is Pranay Agarwal. So
hi,
Jitesh, so I am
your voice is cracking.
Sorry?
Hello? Voice is cracking. Hello?
Yes, am I audible?
No, sir. Actually, there is a system. Again, so should I repeat the question?
No, I got your question, but am I audible?
Yeah, sir. Now it is clear.
Okay. So Jitesh, we have launched a discount broking of our own called StockScart. So StockScart is a 100% subsidiary of SMC. So you can say StockScart is competing in the market with the likes of brokers you just talked about. So in StockScart, we have a different kind of strategy. We have gone ahead with software as a service model. We believe that the trading platform is the product which is essentially we are offering. So we have invested a lot in technology over the past 1 year, and hence the result is we have launched an app which is StockScart, and it has been rated 4.5 plus on Google Play Store and App Store. And I'm happy to inform that we are growing month on month. Even in May, I can say in this quarter, we have nearly tripled the accounts we opened in Q1. We will see by the trend line of the first month, we will probably triple the accounts we have opened in Q1. So I think your question was mostly how are we competing in the market. So this is I think, do you have something else which I can talk about?
Sir, actually, even there's a one thing just need, because already the Zerodha and Grow are also providing the discounts. So how it can be because how it will be a KPI for because already there are the big players in the market. So I just need to understand about the KPI, because how it would be differentiated, because as you mentioned just now, you are providing the discounts and things but same strategy has been also provided by them also. So
we are running on a different model. We are running on subscription model. So as I told you, we provide software subscriptions. A client can basically pay just 99 rupees per month and do unlimited trading on our platform, on the StockScart app. So this is kind of a software as a service model, and we are growing our subscriber base. So it's 99 rupees per month and 699 rupees per year. Both the options the clients have, and they can choose either of the model, and they can subscribe to the platform. So this is innovation in the industry which we bought. This is kind of apart from the existing models existing in the industry, which others are providing. Even our cost of acquisition has also come down a lot since we launched this model, because a lot of clients are organically coming to us because of this particular problem we are solving in the market.
Okay.
Right.
Sounds fair. Fine.
Yes.
Like, I don't have any query search, like, because, like, fine, like, I just have like just need to think, and like, because what happened, like, when I see the result and when I see the, as you mentioned, the cost, consumer cost acquisitions, like, when I compare the cost, it would be like Zerodha and even a Grow, like their acquisition would be like even into a like very less favorable, very less favorable cost, like. So I just, you are like very acceptable, like fine.
Right. So just to give you an idea, our cost of acquisition has come down from around 1,000 rupees per account to around 200 rupees per account since we launched this model. And our ARPU is about the same in this model also. Because if you talk about industry average ARPU per active client for a discount broker is 2,000 rupees from brokerage. There are other schemes of income also, but from brokerage, it's 2,000 rupees per active user. And the activation ratio is around 20 to 25% on an average. So if you talk about per client, not on active client, it comes down to 500 or 600 rupees. And because we are taking subscription upfront, all our users are paying customers. They are not just opening an account and are not actually with the intention of trade. So our ARPU per client comes down to the same level as the other brokers, if that answers your question. And the cost of acquisition is significantly less.
Okay, fine.
Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Ayush Seth from AS Investments. Please go ahead.
Hello. Hello, am I audible?
Yeah, Ayush, you are audible.
Yes, sir. So my first question was, can you, sir, provide insights into the asset quality, including the trends in the collection efficiency and the gross and net NPA, and as well as if any stress pockets are emerging into the business?
Yes. Hi, this is Himanshu. So I'll take this question. So as we discussed earlier, there are certain delinquencies that have been observed during the quarter, particularly in the secured portfolio. So as a result, the GNPAs have gone up, and we are taking appropriate measures like we have the Sarfati right, and we are in active discussions with the client. So we are very hopeful to get the recoveries done. Some of them would happen in quarter 2, and rest of them we are hopeful to get it done during the year, most of them. And so this was the major, trend that you were asking. And on the top of it, we have been focusing now on the retail portfolio. So the average ticket size of the new book, that is, has gone down to around 10 to 15 lakhs. Vis-a-vis, on the old book, which was around 1.5 crores for the LAP portfolio. So that will also help, to avoid spikes in the delinquency numbers in certain quarters. We have already, implemented that since about quarters, and we have been building the micro lab book, which has reached to a AUM of about 35 crores.
Okay, sir. Understood. Hello.
And we have also started taking the CGTMSE coverage on the unsecured portfolio for all the loans which are getting disbursed since about a year now. So that is also, helping us to reduce the delinquencies.
Okay, sir. So basically I also had a second question. So it was regarding how would you describe your capital position, sir? Are there any considerations or plans for fresh capital infusion into the near or medium term?
Yeah, so, we are, open for, capital raise. for the debt facilities, that is a continuous process which we do on a regular basis from banks as well as from through NCD mode. And regarding the equity infusion, we will see to it as and when it would be required. Right now, the capital adequacy is around 43%, so we are very comfortable.
Okay, sir. I also had one question regarding the insurance broking segment. Just wanted to know that we saw a drop in gross premium collections in this quarter. So basically, do you consider this to be a seasonal fluctuation or an indicative towards to a broader trend?
Hi. So this basically is due to the seasonal nature of the industry. The premiums in last quarter of the financial years are always higher. That is basically seasonal.
Okay. Thank you.
Yeah. Okay. Thank you.
Thank you. The next question is from the line of Deepak Jaggi from Vyom Investments. Please go ahead.
Yeah, hello. Thank you for the opportunity again. Yes, sir. Just I wanted to understand that, as you said that your revenue from stock card on a yearly subscription basis is 699 rupees. So how is the trend of acquisition of the customers? How are we onboarding new clients every month? Can you give some elaboration on that?
Yes. Hi. So in the Q1 we opened around 11,000 accounts only from StockCard, but we have launched this plan in mid of the month of May itself. So you can say in 1.5 months primarily this acquisition took place, and the trend is ever increasing. In Q2 we are seeing a trend that probably will triple this account count.
Okay. And sir, how is our full-time broking segment performing? As through the stock card, currently it is a very small part of the broking segment. So how is that going?
Yeah. Hi, I'm Ajay Garg. Yeah, even in full booking, you see, like, because of this new regulations where the weekly option has been only one contract, one exchange, an increase of margin in expiry and less FPI activity, because there was a dip, industry-wide there was a dip of around 25% into volumes after Q3, Q4 last year. So as compared to Q4 last year, this year has been, Q1 has been almost steady. But if you compare it with the Q1 last year, in SMC, there is a dip of around 20%, whereas the market has dipped around 25%. So we are better off that way. And as even Subhaji pointed out, that we are spending a lot on improving technology, and you see cake size is increasing day by day. 27,000 crore SIP AUM was there in the month of June. We do have largest number of IPOs, and today we do have 19 crore Demat account. Though the unique numbers are much lesser. So what I feel that the penetration is still very low as in India. If you see the penetration, it should be around 5 to 6%. So we have a long way to go, and there is a room for everyone. So SMC do have presence in more than 400 cities, and we do have more than 2,200 franchisee network and around 200 branches all across India. So because in Q1 and even in Q2, because of various trade tariff global cues and because of some uncertainties, the market was a bit spectacle. But I think the second half should be much better. Q2 even we have to observe, but second half should be much better, and we can see a very good growth in this year by the year end.
Okay, sir, got it. And so my last question is that in going future, what we do want to be, a discount broker or a full-time broker? What will be our major focus on?
Basically, like, there is a room for both the things. So because in discount brokerage, the client is of his own. in full brokerage, it is the relation. Because at the end of the day, because I had the full broking arm, so what I feel that at the end of the money, client has to make profit. So we do have a lot of branches, like around 2,400 physical offices. And we do have a big research team. Our research is also very, very good. We do have very good tools. And now the algo circular has come. So now the algorithm-based trading would be leveraged to the retail clients. So we do have edge as far as this thing is concerned. Discount brokerage has also revolutionized. It has without discount brokerage and without the technology, this number would not have been 19 crores from 4 crores pre-COVID. So it is very good for financial inclusion, and I feel that we are still at a very nascent stage, and there is a room for both discount as well as full booking.
Okay, sir. Okay, thank you so much, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Rimal D'Souza from an individual investor. Please go ahead.
Hello. Question is to Mr. Subhash Agarwal. The question is, in a recent online interview, you mentioned a target of reaching 8,000 crore in AUM. Could you please elaborate on the key strategy or the growth drivers that will help you achieve this milestone and the timeline you're aiming for?
Miss, you say which target we have given?
Yeah, it was.
We are talking about mutual fund AUM.
Sorry?
You are referring certain figure. What is that?
No, I saw an online interview on YouTube. So you had mentioned that you're reaching for a target of 8,000 crores in asset under management. So I wanted to know what are the growth drivers and the timeline which you are aiming for.
Okay. So that is we have around 4,500 mutual fund AUM distribution team. So we can achieve 8,000 crore in 1 year.
In 1 year. Okay.
Yes, we are trying to achieve that.
Okay. What are your growth strategies for this?
Yeah, actually, our app, through app we are procuring mutual fund, and we have not so many distributors, and it's more than 6,000 distributors. So by that we can achieve. So that within 1 year we are targeting to achieve this.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Anuj Dutt, an individual investor. Please go ahead.
Thank you, sir. So I wanted to know, how viable is mutual fund distribution as a long-term revenue stream, particularly with the ongoing shift between direct and regular plans?
Anuragji, you are there?
Yeah. So good evening. I'll take this question. So no doubt we can see some shift from indirect to direct, but again take size is increasing, and further we are very small in the pond as of now. We are just at 4,500 crores of AUM. We have grown approximately 17-18% in last couple of years, and we are targeting a much higher growth in coming year, and that will definitely add to our top line and bottom line. Yeah.
Okay, thank you, sir.
Yep.
Thank you. The next question is from the line of Deepak Jaggi from Viom Investments. Please go ahead.
Yeah, sir. Thank you for the opportunity again. So, sir, as you mentioned that you are targeting 8,000 crore AUM in mutual fund in next 1 year. So, basically, I just wanted to understand how we are going to achieve that.
You see, Earlier, what we were not providing a back office software to our mutual fund distributors. So we are able to provide them, and due to that IT technology, we are hopeful that our mutual fund will be double in 1 year time.
Okay, so are we doing also any marketing strategies or any other such thing to increase our distribution?
I think, Anurag, you can take this question, marketing strategy.
Yeah, we have started all that. We have completely revamped our strategy. As I said earlier, with the complete changes in our back end and front end systems, we will be definitely targeting a much higher amount.
Okay, sir. Okay, thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Mahesh C. Gupta for closing comments. Over to you, sir.
Thank you all for joining today's earnings call. We trust we were able to address your queries effectively. Should you have any further questions or need more information about the company, please feel free to reach out to our Investor Relations Advisor at XB4 Advisory. Stay safe and healthy. Thank you very much to all. Thank you.
Thank you. On behalf of XB4 Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.